This is the 13th problem of income from house property. Let me explain the problem. Compute income from house property from the following information, particular 4 houses, municipal value, fair rent, standard rent, monthly rent for first house, second house no monthly rent, third house 7,000 and fourth house 9,000. So first house is a let out property, second house we will see it later. On the basis of adjustment, we will consider it whether it is a self-occupied or whether it is used for other purpose. And third house is a again let out property due to monthly rent, and fourth house is also let out property because monthly rent given for these three houses except for second house. Vacancy period: first house 3 months, third house 1 month, and fourth house is also 1 month. Repairs is not required for our calculation. Municipal tax paid for first house and second house it is 3,000 and 1,500. No municipal tax paid for the third house and fourth house. So you have to consider only the municipal tax paid. Due amount is not to be considered. And next point is, in respect of house 1, an unrealized rent of rupees 5,000 was recovered during the year relating to 2013-14. So it says that in case of house 1, so there is an unrealized rent and it is related to the year 2013-14, not for the present previous year. So it is a unrealized rent of 13-14 and which was recovered in the current previous year. So therefore it is considered as a income. So you can add it at the time of calculation of house 1, or you can consider it at the end. So that is left to you. You can consider at any time, but you have to consider it as an income because it is a unrealized rent of preceding previous year and which was recovered in the previous year. So therefore it is considered as a income for the present year. So 5,000 you can add to the income of the first house, or you can add it at the end for the grand total. Next one is a house 2 was self-occupied. So second house used by the SSC for residential purpose. So now second house self-occupied. Next, the SSC had borrowed rupees 2,50,000 at 12% per annum on 1st August 2014 for the construction of the second house, which was completed on 31st October 2016. As on 1st April 2019, rupees 2 lakh was outstanding. So this is a loan details and it is related to the second house. So there is a loan amount for the second house and loan borrowed rupees 2,50,000 at 12% per annum. The loan borrowed on 1st August 2014. So with the help of these details, you have to calculate interest on loan, and that is only for the second house. And next point is, in respect of fourth house 1 month rent unrealized, the claim was genuine and satisfied the condition. So this statement is related to fourth house. So in case of fourth house, there is a unrealized rent and that is 1 month unrealized rent and it is related to present year, and you can consider this unrealized rent while calculating rent received, and SSC fulfilled all the conditions related to the unrealized rent. So therefore you can consider the unrealized rent of fourth house while calculating rent received. So this is the problem 13. So four houses. First house is a let out property, second house is a self-occupied, third house is also let out property, and fourth house is also let out property. There is no much details. I have solved many problems. So only here is related to some unrealized rent. Points are given. In case of first house, it is unrealized rent of preceding previous year. It is considered as income for the present year. Whereas in case of fourth house, unrealized rent of present year given. So that is considered as a expenses. So that you have to deduct at the time of calculation of rent received. So first house is a let out property. So as per the provisions of let out property, you have to calculate or you have to assess the first house. So first stage is expected rent, that is 32,000. So I will go directly to the rent received. So monthly rent is a 9,000 here and vacancy period is a 3 months. So out of 12 months, total let out duration is a 9 months. So 9 months only let out duration. Rent received is only for let out duration. Let out duration is 9 months. So 81,000 is a rent received. No unrealized rent. So gross annual value, second clause, due to vacancy. So gross annual value is equal to rent received. It is 81,000. So municipal tax paid 3,000 and net annual value, that is as usual calculation of like other house property which I solved in the previous classes. So you are going to get income from house property of rupees 54,000 in this first house. And as like I told in the beginning, there is a 5,000 unrealized rent related to the previous year 13-14, which was recovered in the present previous year. So it to be added to the income of the income of particular house property. You can add it to the house one, or you can add it at the end for the grand total. I have added it here only. That is a recovery of unrealized rent of 2013-14. Add. So point you have to remember is you have to add, yeah, because it is a income for the present year. So it is a 5,000 is the income. So total income from house property in case of first house, it is a 59,600. So only one point you have to remember here is one is related to unrealized rent. So you can add here, or if you forgotten to add or consider at the time of assessment of house 1, you can add at the end for the grand total. So that's about the first house. Now the second house is a self-occupied. There is no much information, much details regarding the second house. So it is a self-occupied property. So you have to calculate interest on loan. Procedure as per the provisions of interest on loan, you have to calculate interest on loan for the second house. Two division, that is one is 1/5 of PCP interest and another is interest on loan in a previous year. So loan amount into interest into PCP by 12 into 1/5. So loan borrowed is 2,50,000, rate of interest 12%, and 2,50,000, 12% is the rate of interest, and PCP is you will get 32 months. The date on which loan borrowed, that 1st August 2014 to 31st March 2017, is called as a pre-construction duration. The total months from 1st August 2014 to 31st March 2017, you are going to get 32 months. So 32 months are the PCP. So 32 by 12 into 1/5. So you are going to get 16,000 as a 1/5 of PCP interest. Next is the interest on loan in previous year. So it is based on outstanding loan in previous year into interest. So outstanding loan is 2 lakh. So 2 lakh is outstanding into 12%. So total you are going to get 24,000. So 1/5 of PCP interest is 16,000 and 24,000 is interest on loan for the previous year. Total interest on loan for deduction under section 24 is 40,000. So total loss in case of second house is 40,000. To 40,000 is a total loss of the second house. Now the third house again let out property for the whole year. Expected rent you will get 21,000. Next, rent received. So total let out duration is 11 months because of 1 month vacancy. So rent received is 7,000 into 11 months. Monthly rent is 7,000 into 11 months is a let out duration. Total 77,000. No unrealized rent. So gross annual value is equal to rent received due to vacancy. No comparison. So 77,000 is a gross annual value. No municipal tax because it is a due, not paid in the previous year. If it is paid, then only it can be deductible. So next is a net annual value, 77,000. Then standard deduction, you are going to get 23,100. No interest on loan here. So total income of the third house is 53,900 is the income of the third house. Next, fourth house, it is also let out property for the previous year. So expected rent for this house is 18,000. Rent received, the total let out to duration is 11 months. 11 months is the total let out to duration. 1 month vacancy. So monthly rent 9,000. 1 month vacancy. Total rent to be received is 99,000. So in that 1 month rent could not be realized by the SSC due to some reason, and SSC satisfied the condition so that you can treat it as an unrealized rent. So therefore you have to deduct 1 month rent. 1 month rent is 9,000, and that 1 month rent could not be realized by the SSC due to some reason, and SSC satisfied the conditions related to unrealized rent so that you can consider the unrealized rent. Total rent received is 90,000. You can consider here itself 9,000 into 10, 90,000, or you can deduct it 99,000 minus 9,000. Why here this rent received is for a total let out duration. Let out duration was 11 months, and in that 1 month rent not received by the SSC. So total actual rent received by the SSC for the previous year is 90,000. The next gross annual value, same clause, second clause of the gross annual value. Rent received itself is the gross annual value. Municipal tax not paid, it's due. So therefore you should not consider it. Next, net annual value 90,000. Next, standard deduction, it is 30%, 27,000. So at the end you are going to get a income of rupees 63,000 in case of house 4. So this is a grand total of all the 4 houses. Only point here in this problem is related to unrealized rent. Other concept is the same like whatever the problems I have solved in the previous classes. So first house 59,600, which includes 5,000 rent of the unrealized rent of the preceding previous year. If you are not considered there, means at the time of calculation of first house, you can consider here at the end. Here, even at the end also you can add. Second house, it is a self-occupied property. Of course you are going to get the loss in case of self-occupied property. It is a 40,000, and house 3 let out 53,900, and fourth house is a 63,000. So total income of for the SSC out of 4 houses is 1,36,500 is the total income. So that's all about this particular problem. Thank you very much.